So last week, I discussed how to fix losing positions without adding any cost or risk to the trade. You can imagine, I got a lot of questions on this one. So in this week's video, I want to revisit not just questions on fixing losing positions, but questions on trading in general. So let's get going with my FAQ. Hey everyone, Tom Gentile. Welcome to Tom's Trading Room. You know what we do here? We show you how to spot opportunity and create alternative risk trades other than simply buying and holding stocks. And in last week's video, I showed those of you who do buy and hold stocks how to fix them when they don't go your way. And what we're going to do this week is I want to take that one step further. I want to talk about a lot of the questions, the top 5 that I found that I think will be the most useful for those of you that are not only have been in this business a while, but for those of you that are just getting started. So before I begin, keep in mind, you can read this disclaimer in its entirety. Just 2 quick things I want to mention. Number 1, you all should know that stock and options and crypto trading, they all have large potential rewards, but they also have large potential risk. And number 2, I'm not your investment advisor. I'm here to show you and educate you on how it is that I navigate the markets and create alternative risk trades in this marketplace. So big questions. Question number 1 had to do with avoiding getting losing trades to start with. So, so we don't have to fix them to begin, as a result. Let me tell you this. If I could figure out a way for 100% of my trades to be right, I wouldn't even have a video on fixing positions. That's one where, as we strive as traders to try to get it right as often as possible, there are times, and you got to realize in this business, losses are inevitable. It's how you handle them, which is why I created last week's video in the first place. All right. So again, great question. I mean, it's a question that we all ask ourselves, how to avoid losing trades to begin with. The problem is if you want to avoid losing trades, you have to stop trading. Losing in this business is part of this business. You have to realize that and how to overcome it. All right. So next question I got was, are you a day trader, Tom? Are you a swing trader? Are you an intraday trader, or a combination of all of these, or none of these? All right. I think all of you know that that I do trade the markets. I've been doing this for decades now. I am a combination of all of this. So out on the far ends, if I were to take the far ends, one end being intraday trader and one end being super long-term trader, yes, I do those. But you know where my sweet spot is? My sweet spot, and this is for me, is between 1 week and 1 month on the trading spectrum. That's typically where the majority of strategies that I trade, whether they're technical or whether they're fundamental or whether they're seasonal, most of those all come into that 30-day or less realm. So that's where I find the majority of my trades. And to add to that, there was another question that came up and said, well, what kind of option trades do you do mostly? Calls, puts, debit spreads, condors? What? What do you do? And again, it's going to be a tough answer, but this is it. I do a bit of everything. Now, you might think that's kind of a generic answer, but this is how I trade options. I look to, if I'm buying calls and buying puts, I'm paying premium for those. So what I'm also looking to do is hedge the premium by selling strategies as well. Selling puts, all right? Selling iron condors. These are part of my overall strategy. And I have this rob Peter to pay Paul type of portfolio where if I get too long, if I get too many, I'm too weighted on options that I've been buying, I want to mix it up with options that I'm selling. So not only do I look to try to neutralize my portfolio directionally, but I also try to neutralize my portfolio when it comes to looking at time premium sells. Because, there's nothing I hate more than being right on a stock and I lose money on the options. And that does happen. That happens from time to time for all of us. So I'm a mix when it comes to options trading. Great question. Next, when it comes to placing managing orders, do I set it and forget it? Do I monitor it hourly or daily? I find this. This is what I find. You do have to monitor trades. But what I notice is the more I look at my trades, the more likely I'm going to deviate from my plan and do something stupid. So when I place orders, I like to already have my target set ahead of time, right? And if I'm buying an option, let's say I buy an option for $2, I'm looking to sell it for $4. If I'm buying an option for $5, maybe I'm looking to sell it for $10. I have the target orders out there placed. And then another thing I'll do is I'll put stop losses in. If I hit the 50% threshold as far as an option trade going against me, I may elect to get out of that trade too. Do you know that there are platforms out there that allow you to set both your profit target and your stop loss? And if one gets hit, the other order's canceled, right? I refer to that as checkmating the markets, putting your orders in ahead of time, win, lose, or draw. And then to me, yes, I look at my positions every day, but I don't like to look at them on a minute-by-minute basis because, you know, if I'm trading something that has a week to expiration to a month to expiration, what is the 15-minute look going to really do for me? Most likely, it's going to cause me to screw something up. Great question. Next, what's the biggest mistake you see new traders doing, and how do you avoid or fix it? Well, this is an easy one. This year, the biggest mistake that new traders are doing is they're watching emotion. They're watching traders take emotional trades, and they dive right into them. And, you know, as a seasoned trader, and I'm not right all the time, I'll be the first to admit it. But what I like to do is I like to see where the crowd is, and I want to see how I can take advantage of the crowded trade. A great example, most recently. All right, so you may have seen Sir Richard Branson blast off for a few minutes in the Virgin Galactic Unity spacecraft, right, and return back to Earth. Everybody was excited. All the news said this was a breakthrough in space exploration. And though it may have been, I looked at this as a sell the news event. I also looked at this as the fact that there were so many people, option traders, buying calls, expecting the stock to jump the following morning, buying puts, expecting the stock to go down the following morning. All this buying binge caused these options to be overpriced. What did I do? I created a selling strategy to take advantage of what the crowd seemed to be missing. So, biggest mistake that new traders are doing, they're making very novice, emotional decisions without checking, especially if you're a trader, without checking patterns, and if you're an option trader, without checking option prices. To summarize, as I said last week, not every losing position is going to turn around after you try to fix it. Things could continue to go south. I've also said that if you have a losing trade that, and you just don't feel like it's going to turn around, best thing to do is just close the position out and move on to the next trade. And in terms of frequently asked questions, I know that this is going to spark even more of a debate. I would love to hear your comments on the questions I had, as well as your answers to help out some of the novice traders out there. Hope you enjoyed this quick FAQ video, and I'll see you on the next one. Bye now.